Hi guys, I'm attorney Ron Rohde. Welcome to another webinar series where I sit down with the best commercial real estate experts. We discussed using the law as well as our investment experience to help you find the best deals in commercial real estate. Today we're sitting down with Cameron Rodgers, who is an industrial broker in the Dallas-Fort Worth area. As you know, this is one of the hottest sectors in the entire country. We talk about how to find the best post-COVID deals, as well as tips for leasing and other issues that affect industrial investment. Tune in, check out this webinar, jump to the spots that you're interested, and hit that subscribe. Let me know what you guys think in the comments. Thanks. Good afternoon. Thanks to everyone for joining us today. I'm Ron Rohde. I'm an attorney, commercial real estate attorney here in Dallas-Fort Worth. And I host a series of webinars with different practitioners that help you make money through your commercial real estate investments. So whether you're an owner, you're a tenant, you're a business, whatever you need, you're going to be touching all these different service providers. And my goal of this webinar and this series, I talk to CPAs, bookkeepers, construction, TI, for TI improvements. It's to understand our perspective and our vocabulary, and then to empower you to make that decision about who you want to work with. I think we give a lot of good tips. I certainly am no stranger. I will tell you everything to look for in a lease. I will tell you the 75 things that I look for, what to change when you get them, and it becomes a function of, do you want to spend the time to look for those or risk missing a couple, or do you want to just hand it off to a professional? Fully up to you. I really support it either way. So again, today we have Cameron Rodgers of Rubicon. Cameron, can you tell us a little bit about yourself?
Sure, Ron. Appreciate you having me. Name is Cameron Rodgers. I'm a native Texan. Was born here in North Texas in Plano. We moved out west to a town called Abilene. Ron, not sure if you're familiar with Abilene, Texas.
ACU, yeah.
ACU, yeah, there you go. About 3 hours west of here. Moved out there when I was probably one, so I've pretty much spent my whole life out in Abilene. Parents still live out there. Actually, we just sold our Abilene home as of last Friday. They're trying to get a little bit closer to the Metroplex. I've got an older brother who's living up this way as well. I grew up in Abilene. It's if you haven't been there, it's a great place to raise a family. I always joke there's a Forbes article that came out, and I'm assuming they probably do one every year, but the one I saw was a few years ago where it named Abilene as a top 25 place to retire. And I'm assuming it was probably just based on cost of living and maybe home price and what have you. It probably didn't take into consideration entertainment or amenities. There's not a whole heck of a lot going on out there, but loved it. It was great. Went to school at Abilene Wiley out that way. For college, I moved to Dallas and went to Southern Methodist University. Played football there through the 08 and 12 seasons with the Mustangs. Had an awesome time doing that. Got to go to 4 bowl games. We broke the 09 year was the year we broke the 25-year drought. Got to go to the Hawaii Bowl there, playing against Colin Kaepernick, which is a name a lot of people recognize these days. We got to experience a lot of neat things, playing at the collegiate level. Great experience, lifelong friendships there. Learned a lot of lessons that I've since taken from the gridiron to, just my life in general and putting it towards, my career. You learn some extreme values of persistence, teamwork, accountability, and it's helped shape who I am today. So transitioned into commercial real estate, where I have been ever since. It'll be 6 years next month, actually.
Wow. Okay.
Yeah. So it's been quite a ride, and Dallas has been a good place to be doing what I'm doing.
And so you've always been in the tenant rep space, though, right?
Correct. And so, the firm that I'm with is called Rubicon Representation, and we specialize in assisting commercial users on their real estate requirements, leasing and acquisitions. We cover a broad range of markets through medical, office, and industrial. Dabble a little bit in retail. That's not our bread and butter, though. And for me, I specialize in assisting the industrial user. So, in its general terms, anybody that's utilizing a warehouse. But a lot of my clients are shippers, 3PLs, fulfillment companies, manufacturers. And my sole focus with those companies is to plan, develop, and execute their real estate requirements and provide as much value as I can to their bottom line, and make sure that their facility is as efficient as possible.
Yeah.
And so it's as you've seen with the DFW industrial market, as you dabble in as well.
I have a lot of clients. Absolutely. So
exactly, it's been a good
competitiveness, and
it's a good market to be doing industrial.
That's right. And I think as a nice segue into today's topic, COVID-19 has changed the commercial real estate market across all different sectors. Everybody can talk about the headlines. Retail is tanking. Office is tanking. Everybody's going to work from home. I think, again, a lot of these fears are overblown. They've done an experiment. They're going to have to revert back to the mean, which is some percentage use of office. But for industrial in particular, we have seen incredible spikes of online shopping. It was really this impetus for people to try out Amazon Fresh or the Whole Foods. They are willing to order more and more things online because of this pandemic, which has only increased demand for regular warehousing, online shipping, just regular distribution, last mile, refrigerated. All of these components were tested, and I think it's shown how much more capacity we can build out in the industrial space. So, we were talking earlier, whether you are very concerned about COVID or whether, you think it's more of the pandemic phase, it has changed how we're going to do business. And with all the bankruptcies, our goal today is to let you know what is happening in our markets, what are we seeing, because we're absolutely seeing changes in purchase and sale agreements, addendums or delays, as well as commercial leasing. And so it's giving, I won't say power, but it is a different context or different contour of a lease in post-COVID-19. And that's what we're going to share to you. So thanks for joining. And again, let's talk about, I guess, about two separate areas. One is acquiring a building, like looking for a deal. We've seen some people, landlords or owners, get a little bit stressed. There may be, if they have a note coming due, they may not be able to refinance. I know that's certainly true on the multifamily side, maybe not as much in industrial yet, but if there are deals to be had, Cameron, talk a little bit about that. How would you find a distressed seller, or how do you handle that?
Yeah, and so it's funny when this pandemic hit, the knee-jerk reaction from at least the tenant base was, let's just go ask for rent abatement. We gotta open the floodgates. We need rent deferment, rent abatement. We need to, if there was a requirement, it was put on hold, or if it was something that had to happen, it was, can we get a blend and extend on an existing term if we were looking at potentially renewing, and we're going to do this now a year early, try to capture concessions today to kind of make it through this short term. It's from, and a lot of this conversation, Ron, will be through an industrial lens, since that's the world that I spend most of my time. Sure. It's funny that, as you pointed out, there's been a surge in the industrial market because of all the online shopping that's happened due to the pandemic. So when you say, where are the deals in the industrial market, there's still not really that many. I mean, rents are still going up, vacancies are still low. And, it comes down to understanding the tenant's needs, and then where the leverage can be with these different ownership types. If you're trying to, work a deal with a landlord like Prologis, who's, the largest industrial owner in the world, they're just listened to their Q2 earnings not too long ago. I mean, they're about to be a 1 billion square foot company globally. Yeah. They're not cutting you deals. because they don't have to.
But they're best in class. I mean, their buildings are going to be
Right.
top notch. So I will then present this as a way to get a deal. Find a portfolio that has an outlier. So either a geographic location, or they have this one old building that they acquired when they bought, XYZ's portfolio, and it's a little bit of an outlier. And as it got consolidated or swallowed up by Prologis, it sticks out even more. And so this can be an obsolete, this is low clear height, maybe it doesn't have dock high, whatever it is, maybe it has a low percentage of office, maybe it has a high percentage of office, something about it that makes it stick out. You can find a deal by cleaving off something that doesn't fit, because I have clients that have had good success even in up markets. You go pitch to Prologis, hey guys, I noticed you own this property. It's not in your wheelhouse. Why do you have this? It's 1961. It's so crappy. It's this, it's that.
Right.
I'm offering you a great price. And they're very receptive to the ideas of take cash and focus more on your bread and butter, because they always want to be the best in class. They want bigger buildings. They want, consistent technology. So that might be the only answer, is find some oddball that doesn't fit in the owner's portfolio. It doesn't have to be Prologis. It could be any REIT. It could be any local, Holt Lumsford, if they have something that sticks out in their portfolio, because I know they kind of buy some other stuff too, in addition to industrial.
Right. No, that's a great point. And to that point, we've actually been able to source within the last couple months a handful of off-market opportunities for that exact reason. There's a portfolio with a group that's typically hasn't been a seller, but they're reevaluating their asset class, and they're saying, well, this handful of buildings aren't really fitting our true portfolio. We'll spin these off and sell. And on the other side of that, you might find, a family trust, a single owner that maybe has one or two buildings in their portfolio that have maybe they're over leveraged and they're looking to get out, or hang on, but they got to have a tenant, and they're willing to go above and beyond what we would typically see in this market to have cash flow in with a tenant. So we're seeing a little bit of both.
Okay. So then that's the other shortcut answer, is all your work is done for you. Email Cameron. We'll put his email address up here, and he'll give you the off-market price for some of these deals, because that is truly the other way, is they like to quietly shop it. They don't want to blast it all over town, and the brokers are the conduit. So if you guys are listening out there as a tenant, work with your tenant rep first, and then you'll hear about opportunities once you have the relationship, and you can buy your next off-market building, and you'll get a great deal. So let's talk about leasing. I think when people talk about being an investor, maybe an owner operator, that's one group of people. But on the other hand, you also have, how do you get a great deal on a lease? And what does even a great deal mean? Because it's much more than just per square foot. That is one component out of the whole. Yeah.
Right. Yeah. And that's a lot of people that, if you're looking at real estate, commercial real estate from a 40,000 foot view, they just see, well, what was the rate that you got? Well, of course, that is one, and that's an important thing. That's one of the main components, sure. But there are so many other items and variables that go into what you would categorize as a good deal, good lease. And, I think it all starts with having enough lead time to obtain that.
Right.
And that's one thing I wanted to talk about is making sure for a tenant, the most important, or one of the most important aspects in leverage is having time on your side. We typically tell our clients, whether it's, moving to another facility, or new facility altogether, or even renewing, we typically ballpark 9 to 16 months out is when you want to start thinking about this and game planning. Because there are a lot of obstacles and variables that go into, from figuring out what your space needs are to signing a lease to moving in. And you want to have enough time on your hands. I've seen it too many times that you'll talk with a company, and I'll tour their facility, in an initial meeting, and you start asking questions, and at the end of the meeting, they're sitting there telling you how inefficient their facility is, and then you ask, well, why are you here? Yeah. And I can't tell you how many times I've heard, well, we ran into an instance where we were 3 months out from our current expiration. We know we needed to move. Landlord knew we didn't have enough time to really go get a good deal, and we were past our renewal option window. We just had to go take something. And it's funny to you talk to people that don't necessarily focus on real estate all the time. Hey, you're 12 months out for your lease expiration when you start talking about this in game plan, and they go, I'm a year out. What are you talking about? That's a year. That's a year. So many things can change between now and then. Yeah. And that's true, but you also need that time to figure out what you need, survey the market, go tour these buildings, get a short list, put out the proposals, work the LOIs, get into a lease, space plan with architects, get CDs drawn up, vendors in line. It's everything. Yeah.
Especially when my clients, they tell me they're too busy and they're slow in their turnaround time to me. I'm calling or emailing. When they're slow, I'm saying, why are you slow? It's because they're busy with their business. They're busy making money. And I think it's imperative that they do this, or they hire the professionals when you're busy making money, because that's what you do. And then commercial real estate is what we do. So it's kind of a self-fulfilling prophecy, is when people hire me and they're too busy, well, I'm saying that's great, but you need to look at your space needs. Where are you going to be in 3 years or 5 years, and plan for that, not your footprint right now. So
right, and that's a conversation we have a lot. It's especially on the front end, just if you can get me the initial basics of what you think you'll need, then I'll go do the work. It's not like I need you to be at my beck and call to say, hey, I need this, that, and the other. Give me some information. I'll go start running the traps on what'll work, and we can kind of go from there. But you have your core competency of you're making XYZ widget to sell, and that's what you need to focus on. I do real estate. This is why I wake up and do every single day. Let me handle that and be a partner for you to move forward with it.
Yep. Yeah, and I think again, there's a lot of misconceptions or different perceptions about what you do. Tell us, I guess, how you can save the tenants money when they're signing. What are some concrete examples that you've done?
So again, a lot of it starts with planning, right? Making sure you have enough time to truly get an idea of what's out there based off of what their needs are. But for a group, an individual like myself who just focuses on the tenant, all of us brokers have access to the same databases. We all have the market expertise. We all can get comps. But it comes down to, at least for me, in my opinion, is a group and an individual that is solely focused on one side of the coin. I'm not out here to try to make landlords money. I'm out here to try to make tenants increase their bottom line and mitigate as many costs as I can. And that comes through just having dealt with these various landlords. I know how a Prologis is going to think based off of what your type of use is, and maybe they're not the best fit for you. Or here, I know.
You signed a lease with Prologis recently. Like, what's a specific example that you changed that helped the tenant?
Yes, we have. And we're actually trying to work on one right now with a group down in GSW. But I mean, there's instances where maybe they don't need. Prologis a couple of years ago rolled out the Clear Lease, where they have their fixed operating expenses. That's a set amount that's going to increase by a set amount every year. And for some groups, it's great, especially if you're a higher finish office use, but with a lot of HVAC. Prologis is going to handle all those expenses in the maintenance and replacements. But also, you might be drastically overpaying on your operating expenses to get that. So maybe for a group that's very low finish, and maybe even for like a startup type company, they might not be the best fit. And also, beyond just the landlord itself, it's also knowing which submarkets deals can be had. If you're trying to be around the north portion of the airport, Coppell, Grapevine, Flower Mound, Louisville, those are some of the highest rents per square foot for distribution users, in general.
Right.
If they're open to, looking in South Dallas, lower GSW, Arlington, and even over in Garland, Mesquite area where a lot of developments are going on, there's opportunities to really work on deals that, like in South Dallas where, a couple of years ago that was exploding with new developments. Yeah. And a lot of these buildings have sat vacant for years. And they're beautiful Class A buildings, but the landlords are willing to get real aggressive to try to get those filled. And we know that, and we know how to tap into that leverage.
So do you think most of your clients are open to location? Do they come to you and say, hey, we're currently here, but we're open to a broader geographic area. Price is more important than being on the west side of Dallas?
It's a mixed bag. I'd say it just depends, for a 3PL group who's very, very cost driven, more so than maybe some other users, they might be more open to looking at cheaper markets. If you've got a group that's, it's got a high employee base,
right?
Like a fulfillment company that's going to have 30 and 40 employees, they've got to be aware and cognizant of if they were to move, who could they potentially lose in their employee base, and then if they are okay and comfortable with risking that, is this new market going to have the labor pool to replenish? So it's kind of a mixed bag. I would say majority of them are at least open to it, just because everything's so expensive right now. If there's an opportunity to save, they'll look at it, but they got to weigh, the cost of moving, the transportation cost, which is, for logistics companies is the number one cost that they have to deal with. And just in comparative to where their customer base is as well. Gotcha.
Okay. Well, I mean, again, I think your experience mirrors, mine. Really working with that tenant rep. It's you get paid from the landlord typically, right? You're negotiating with them.
I never look to my client to get paid. I'm not. Landlord pays my fee.
Yeah. All right. So the next thing we have is kind of the leasing timeline. I think we've talked about it briefly, 9 to 16 months prior to the expiration of the lease. I would add in too is check your lease, check your current lease, because that 12-month renewal notice, that could be earlier or it could be later. So that can help skew your timing needs. And again, if you're more of a manufacturer, you want to bump that up longer.
Sure.
I think the best threats are ones that you're really prepared to carry out. And if you're a manufacturer and you've got a lot of requirements and you've got a lot of heavy equipment, you need to say 24 months prior, oh yeah, I'm planning on leaving. Oh, I got plenty of time. I can move these things by hand if I need to. You got to give me a good deal or else I'm going to leave. And that's the only thing. Because if you say that 13 months before you lease, the landlord's not going to take that seriously. And the longer the delay in the negotiation, you're getting backed up against the wall because you need to decide. Okay, so we have that down. Let's talk about, I guess, broader market again. Are you seeing sub-markets, anybody going up in vacancy, or are people shying away from any sub-markets?
I haven't seen anything that's worth writing home about. At least, again, in terms of what I'm seeing on the industrial market. I will say that I've been reading some articles just in regards to COVID in the office market, where I think you'll see a trend where groups are going to want to push out to the suburbs and try to capture more low density opportunities, as opposed to trying to find something in CBD Dallas downtown and have people sitting on top of each other. I have seen that. So you talk about up in Plano in the Tollway or Frisco and in the Colony areas. I think you'll see more activity in those type of suburban office markets, as you will into a high density CBD type of structure.
Right. So they're going to need more square feet per employee, and if their costs stay the same, then they need to push out to those areas. I mean, I think that makes sense. definitely the last mile hype, and everybody talking about e-commerce.
Mm-hmm.
I feel like it's still just a small slice of the total commercial real estate pie, and people need to understand it's not one thing that's causing a tidal wave shift. The one thing is like interest rates. The one thing is like 1031 exchange. Those will cause massive ripple effects throughout the industry. But these shifts that we're talking about is, okay, a little bit more to the suburbs, a little bit more over here. People are getting further away. But I mean, again, I think it's great. Every manufacturer too that wants to control their distribution supply is taking down their own warehouse. The incremental effects of bringing your supply chain domestic, storing up a little bit more of reserves, for whether it's parts or appliances or that stuff. They're not relying on the slow boat from China getting here on time without tariffs, without being delayed by cross-country travel. And so that's just going to benefit those population centers, population growth areas like DFW, because people are going to want to build and sell here in North Texas. So.
Right. And to piggyback off of what you just said, we're seeing that a lot. Obviously e-commerce is been riding the tailwind for a few years, the Amazon effect, and the pandemic has just ignited it. But you're seeing a lot of just manufacturers and just general warehousing groups restructure their supply chain model to what you had just mentioned with the disruptions that they've seen, to where they're going from more of a just-in-time model to more of a just-in-case, where they're going to have additional buffers of inventory to counteract any further disruptions, whether it's with China, the pandemic, you name it. So we've got groups that are not necessarily growing per se in terms of demand volume, but they just want to have this on hand just in case.
Right.
So we've seen an interesting shift in those type of supply chain updates.
Yeah. One thing I think we didn't talk about, and the other way to find deals in this market, buy a vacant building. I mean, obviously that's the second biggest risk way to make money, short of building spec warehouse. But buying a vacant building, either with a tenant in mind or to have a rehab plan and really update a building and hopefully make it more attractive to find a tenant, that's the other way to make a quick, 200% return on your equity. It's really incredible how cheaply I've seen buildings trade for when they're vacant. Basically it's way below replacement cost. Somebody just wants to dump it.
Right.
And you put a good tenant in there, you fix it up, you put a good tenant with a long-term lease, you can flip that sucker for a ton of money, or you can hold it for the cash flow, if you really believe in it. But I would say those deals are still out there. It's not the case that we don't have any vacant buildings. We have vacant buildings, but they're of poor quality, or they're just not ready to be leased. So. Sure.
Or we've seen, through the pandemic, we saw, DFW was leading the nation in under construction projects and the first half absorption. I think as we sit today, we're right at like 16 million square feet of net leasing, which is, insane. But when you look, you get granular in it. It's a handful of huge users gobbling space. Amazon, Uline just taking 1.2 million in Passport, the southeast corner of the airport. Mars Pet Care, FedEx. A lot of these big groups are moving that needle. So through the pandemic, you were seeing a lot of these, big box distribution centers getting gobbled up. I'd say 300 plus thousand square feet was the activity was there. There's kind of what I've seen is there's a window between maybe 100 to probably 200,000 square feet, where there's opportunity there. There's still a decent amount of vacancy,
and they're not building new construction. I mean,
no,
that's a sweet spot. Again, I talk about this with some of my investor groups that I work with. Is all the eye-popping headlines are the bomber buildings, the million
Right.
square feet, 500,000 square feet. That's great, and it makes for great top-line numbers to get the 16 million absorption, but that doesn't reflect the reality. You've got plumbers, you've got electricians, you've got building materials. These are all normal mom and pop or regional type shops, or even like a franchise type location. They need 100,000 square feet. They're not signing a 500,000 square foot lease, but nobody is building new construction of this, and it's just not profitable. But those are the people, those are the tenants that are looking for space. So if you buy in that sweet spot, those tenants, they're going to come for you because they're busy, and they're very busy in DFW, and nobody's competing with you. So
Right.
I
No,
like that
I agree.
sweet spot a lot. Yeah.
Yep. The problem is that sweet spot, those users don't want to be out in Lancaster and Hutchins, and that's where those big developments are going on. And it doesn't make sense for the developer to build that size requirement. That you're seeing that a lot of the infill sites, which have, now are few and far between, unless it's just got a lot of hair on it, and it's hard to make sense of the remaining tracks that are the true infill sites.
So what does it take? What will it take for new construction, development to make sense on let's say like a 100K building? Obviously, I mean, the land cost right now is just through the roof. The guy's going to say, I can sell this for apartments. If it's anywhere, if it's somewhat decent location, he could go sell it for multifamily, or at least that's what he's going to say in the negotiation. But does it need rents to like go to $12 a foot or something for an, I don't know.
God, I hope not. That makes my job so much harder. That's a good question. I don't know if I have a clear cut answer, but yeah, I mean, to make sense of the land cost and your basis of what's going to be in the building to achieve the rents. That's a good question. I'm not sure what it would take.
Because at the end of the day, I do think that number is pretty high. And
yeah.
There's a lot of outfits in, let's say, like California or New Jersey markets, right? Fully landlocked, fully built out. They very, very rarely build new construction of that size in the Inland Empire, for example, or LA County. Mm-hmm. But their rents just keep going up because of the density. If you're outside of that, I wouldn't say MSA, but if you're outside of that county, the traffic and the drive times go to 1 hour plus, and they say that's just not feasible. So then they pay the rents to be in that area. Are we going to see that in Dallas? Because I don't feel like we're as landlocked, but the numbers don't pencil out if people aren't willing to sell land at a lower price. So
right.
Maybe the rents will keep going up.
Potentially. I mean, yeah, and compared to other markets, I mean, that's, I'm obviously very bullish on Dallas. Comparatively, our land prices are still cheap.
That's true.
We're central time zone. We've got incredible infrastructure. You got the DFW airport, one of the most active airports.
Right. During the pandemic, we hit number one.
Yeah. And you got that. We're bookended by two intermodals, BNSF and the Union Pacific. We still have land.
Yeah.
We still have land to build. And of course there's the, no state income tax. We're a very business friendly group. So I think Dallas has, in my opinion, a much longer runway than a lot of these other, tier one markets, where, yeah, I mean, rents are going to continue to go up, but I don't think at the rate that you would see in an Inland Empire, LA type area. But, time will tell.
Time will tell. I mean, I think, what are we going to compare against? We're comparing against Atlanta. We're going to compare against like a Nashville. They have a lot of the same argument, except maybe they're not as centrally located. They don't, but Atlanta has a good airport. Tennessee wouldn't, but that's really the type of competition I think we're talking about. And I think a rising tide is going to lift all boats, right? All states. So the southern states are still going to continue to grow. So Dallas will have a weird situation where rents will continue to go up on those infill sites next to vacant land, because the only thing that can keep that land cheaper. The only thing that make it more expensive is if somebody built a different use on it and was, generating income.
Right.
If they don't do that, then it doesn't flood the market. So it's not going to push rents down at all.
Right.
Yeah. I mean, look, this is the kind of analysis that I think I try to help my clients understand too, is what are your investment goals? And then how can I make the purchase and sale agreement and your subsequent leases match these goals? Because if you have a short-term horizon, as a lawyer, I'm a lot more willing to let things slide, like rent increases or taking off caps on CAM 5 years down the road, because you're not going to be there. I'll go ahead and concede things to a tenant to get them to sign, and then we'll peace out. But if you tell me, hey, Ron, we're part of this, Cameron Rodgers viewpoint of long-term growth in Dallas, we might want to hold this building through the end of his lease. I'm going to invest a lot more time, and I'm going to, charge you for it, but I'm going to invest in getting a lease that really matches your long-term horizon. So that's kind of my plug for, how the lawyers can help you do the deal, because leases are not all equal. And when you have the opportunity to write a lease, really make sure that it reflects your particular goals and your time horizon as an investor or an owner, or even as a tenant. I'll put a lot of time into a renewal if they think that there's a 50% chance they're going to renew, or even a 30% chance. But sometimes they come to me and say, let's just do market rate on the renewal. We don't think we're going to be there. We think we're going to grow, or we think we're going to do something else. So again, that's the alternative. Instead of leaning on your broker to explain the lease to you, who, our interests are different, our skill sets are different. I look at leases every day. I look at contracts. So it's all about the cost. And, to answer one of my earlier questions, I asked you, like, concrete examples. So pass through on CAM, I've seen leases where the tenant's like, oh, I'm ready to sign this. Ron, can you just give it a once over? And I said, let's push back on this. Let's push back on this. We knocked out some expense items and said, these are not pass through. We're not going to pay this. We have a cap on, attorney's fees for the project. That's silly. There really shouldn't be. We put a cap on it, and then that makes sure the tenant saves money so that the owner doesn't get to pass all these fees on through the triple net. And the landlord agreed without any negotiation, because they knew it was a stretch. That was their first draft, their first offer. So, I pay for my own legal fees just on expenses, triple net expenses alone. Yeah,
no, and it's I'm glad to hear you say that, and everyone that's on this call listening. As soon as I get a lease, I always recommend that they have an attorney review. I look at leases every day as well, but I am not an attorney, and I'm not even legally allowed to give legal advice. I give my opinion. I'll read it, but we always push to have our clients get in touch with guys like you who see this through a different lens, and they'll catch things that I won't catch, and vice versa, and just more on the business points. But and that kind of goes back to how do you secure a good deal, good lease? Well, you need to have the right team in place to do that, and this is what's part of it, having a good tenant rep and a good attorney to be looking out for your interests and catching things that otherwise, if you're trying to do it yourself, you're never going to see.
Yeah, and I think you don't know what you don't know, because again, a lot of my tenants or my clients, their tenants, they might be smart and they understand the legal process, but they only look at a lease once every couple of years at best.
Exactly. Yep.
And they're really not in tune with the market and doing as many deals. I mean, I thought it was really interesting. I kept, opining this. We were closing deals in COVID. We had several deals close in COVID. We did a little bit of an extension. We went under contract in COVID, and we're still doing some of those now, but it really hasn't impacted commercial real estate too much. Maybe it's changed some of the financing terms and made it less attractive, but people that have the same motivations as before, they're still doing deals. So
Right. And I meant to ask if you, whether it's you putting it in or have you seen it from the other side, is there, whether it's force majeure language, or have you seen anything that's been specific or has changed because of COVID, and you think it will be the new norm to see it in leases going forward?
Yeah. So again, people are definitely putting those clauses in, and I've been guilty of it too. You know, my client will ask for it, and I'll definitely put it in. It really just depends on who has leverage in the deal,
Mm-hmm.
whether that stays or gets kicked out. Because again, I've seen it both ways, 100%, where we've booted it out. I was a landlord. We had some pretty good leverage. The tenant wanted some COVID, and we completely nixed it. Nothing, you know, no protections. And he was getting a good deal on his space. But on the other hand, I might represent a buyer, and then I'm shoving the COVID down their throat, saying we're not gonna go under contract without this, because there are specific situations like a government pronouncement, massive infections that prohibits or prevents us from completing our terms. You know, we need to acknowledge that there could be things that occur, and we don't want to be liable for breach. You know, for example, like everybody at the title company gets sick. Whose fault is that? What should we do?
Mm-hmm.
And before you might have said, oh, no, it's not, you know, it's very unlikely. And now we're saying, well, it's more than unlikely. It's probably a 1 or 2% chance. So let's put that language in, because we don't want a he said, she said terminating contract because the title company was shut down on the day of closing. So,
Yeah.
but yeah, we're definitely adjusting, and it's like I said, I would say it's up to your leverage in the deal. Like so many things, people are putting COVID addendums. I don't know that they're standardized yet. There's definitely no standard language, but people are asking, and they want to be covered in case something does happen.
Yeah.
So I think that's probably, I mean, we've covered everything, the lawyer, tenant rep, how to find the deals, email Cameron. I'm going to put his email up here again. The lease process, you know, it's start early. That's the critical.
Start early. Have as much time. You rather say, we've got too much time on our hands.
Right.
You want to lean on that edge. I hate seeing where it's a tenant's backed up against the wall and they're forced to make a bad, oftentimes multi-million-dollar decision.
Yeah.
I hate seeing it.
Yep. But if not, then I just, you know, I want to thank everybody for joining. I will email out a recording of this. Give me a day or two. I'll edit it and, you know, throw in the graphics for your email and stuff. It's very handy. I can look up some citations for your quotes too.
There you go. Yeah. Make me look pretty too.
Can't do that. Can't help you with that one. All right. Thank you guys for attending. I really appreciate it. And thanks, Cameron.
Thanks, Ron. Thanks for having me.